Okay, welcome back everyone to the 7-day crypto profit accelerator. We are on day number 3. Once again, I'm going to take 30 seconds, quickly go through the overview, the outline, and then we're going to dig right in. Okay, let me share my screen. We'll get rolling. We're on day 3, the strategic approach. We talked about how yield farming even works in the first place, how to fund your first wallet. Today, we're going to be digging in deep to the strategic approach, meaning, hey, from like a framework level perspective, if we pull back and focus less for a moment on tactics and tools, what is the strategy that the tactics and tools help to facilitate? Okay, and then obviously we're going to move forward, talk about avoiding scams and staying safe, super critical. Day 5 is going to be a little more nuts and bolts, like, hey, click by click, how do you actually put one of these tactics into play? Day number 6, we're going to be talking about the big picture mindset of an investor. And then finally 7, back to nuts and bolts, the mechanics of it all, how to harvest those gains and take next steps and compound. All right, let's get to it. All right, we're talking about the strategic approach. And anytime we talk strategy, I want everyone just to be aware of where this falls. So we'll talk often about principles being kind of the foundation of everything. So you start with big picture principles, then those principles inform what your strategic approach is. And then that strategic approach, in order to actually execute that strategic approach, you will need a few tactics. Now, on day 1, we talked about yield farming, how yield farming actually works. That is a tactic, okay? Yield farming. That is one of the tactics that is involved in this strategy. And then when we get down to tools, that's things like, hey, a wallet, a Web3 wallet. That's one of the tools that you might need. Hey, you might need to leverage the use of a DEX, a decentralized exchange platform. That is a tool that is available to you. And hey, you might need some other app, like a Web3 app or tool or liquidity management protocol, something like that. But here's the thing. Most of the crypto stuff that you see online really is either 100% this or a little bit of tactic and then mostly tools. So that's why you see people promoting, and we'll talk more about this on the scam session. You see people promoting these like ROI dApps, decentralized apps. That's a tool, but they're basically saying like, hey, look at our tool, look at our tool. Or they'll tell you, oh, we've invented a proprietary trading platform and oh, you have to log in and they're saying we've got one tool. That's the only tool we have. And if you use our tool, you're going to do very, very well. Well, in my opinion, big picture, that's silly. Why would you limit yourself to one tool, especially when the tools are the lowest on the totem pole in terms of, hey, where they fit into the big picture? We want to start with principles, move that into strategy, create some tactics based on the strategy, and then that will inform what tools that we actually need, and then we can move forward and find the tools that actually facilitate us executing on the strategy that we're using. Okay, so I'm going to break down the strategy for you, and as we talk about this, keep in mind this is at the framework level. Okay, so as I walk you through it, acknowledge that, hey, there are multiple tactics and there are even more tools that allow you to implement this strategy. And that's where sometimes it's, especially if you're new to this game, it's easy to get lost in the mix. You go, wait, Brendan, what should I do? What do I need? And I'm like, well, there's a number of different tactics and tools that you could use to execute on this. Here are a few that I recommend. And that's basically what this 7-day series is. Like we talked about MetaMask wallet. That's just one tool, one wallet among many, 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 many. But you got to start somewhere. And so I give you that recommendation, not to say it's the only tool that you could use, but rather to acknowledge, hey, it's one tool among many, but we do have to start somewhere. Okay, so let's get into strategy. Strategy. All right, so first of all, you will have what we call primary assets. Okay, now in this strategy, the first primary assets that we talk about are blue chip crypto assets. I'll make a note of that. blue chip crypto assets that we can create liquidity pairs with. Okay, remember how yield farming works? It's based on LP, liquidity pairs. When you pair two assets together, you become a liquidity provider. You earn a yield or a reward as a direct result of that. So in this strategy, we're saying, hey, we'll begin with some blue chip crypto assets. And for the sake of these videos, I'm always going to use Bitcoin and ETH as an example, just because most people are very familiar with those, even if they're brand new, even if they're not in crypto. You've probably heard of Bitcoin and ETH. And they're just like at this stage, they're the OGs, they're at the top of the pile in terms of market cap. They're very, very widely adopted. They have very obvious utility, and they are steadily growing over time. Okay, so primary crypto assets, those would be your blue chip pairs that you put together in order to form LP, a liquidity position. Now, when you do that, you will generate some sort of reward or yield, okay? We'll call this secondary assets. Now, it's a little bit of a misnomer because there's still, like if you pair Bitcoin and ETH, a majority of your rewards will be in Bitcoin and ETH. That's how the liquidity game works most of the time. But there are situations where you can earn other assets as rewards for a result of being a liquidity provider. So remember, we're talking about a strategy, fully acknowledging that there will be many different tactics and tools inside of which we can implement the strategy. So I'm just saying that for the sake of the framework here, your primary assets will generate for you secondary assets, okay? And whatever that might be, I'm going to put a dollar sign, even though it's not delivered in dollars at first. I'm going to put a dollar sign because we consider that to be profit in the sense that it was created by virtue of you making this liquidity position, and now you are being rewarded, okay? Then we take those secondary assets. So it might be a little bit of whatever you got, and it also might be another token. So I'll just call it, I don't know, TOK. I don't think that's a real one, but it might be. We'll call it token, meaning like generically there could be other types of rewards that are produced as a result of that. Then, and again, here's where there's multiple different options. There are opportunities to either single stake those secondary assets or swap them for what we're going to call tertiary assets. You can stake and earn or swap them for other assets, and you create this whole other category. And this is what ends up becoming, for lack of a better phrase, just your bull run portfolio. Okay, I know that's kind of like a generic term, but we're at a place right now. Again, it's May 5th, 2024. Okay, we're post halving at this point. We're headed into the bull run. In all likelihood, if history is even remotely similar to what it was the last few cycles, we're going to see over the course of the next 12 to 18-ish months, right? Just like a kind of like a loose time frame. It's not exact, but somewhere in that time frame, we're going to see a general up and to the right trend amongst most of crypto assets, okay? Bitcoin being the leader of the pack, and then all the other altcoins and things kind of follow suit. So from your secondary assets, you're able to produce tertiary assets. And then this is what we call the stuff it in the mattress approach. Those tertiary assets, you kind of stuff those away off to the side, and you let them just appreciate in value during the course of the bull run. Okay. Now, this strategy, keep in mind, this is what we're doing right now, given the season that we're in. It remains very similar, but there is a shift when we get into the bear market. That's quite a ways away. That's probably 18 months away from now, but just acknowledge ahead of time, there is a shift, okay? So it's not like you can just blindly do this at any point in the crypto cycle. There's kind of an ebb and flow to the whole thing. So these tertiary assets, we stuff them away. We form a bull run portfolio. We're earning, again, like it's like interest on interest on interest, compound, compound, compound. And over time, they will also appreciate in value, okay? So from a framework perspective, that's it. Very simple and straightforward, okay? And now this is where we get into some variables. What are some options? Because you can, one of the options, and a lot of people in the mastermind are doing this right now, we take those gains and we filter them back over here, and we add to the base capital that forms our initial primary asset collection, okay? So the idea here is that with your primaries, this is the capital that you use to generate trading fee income or rewards or yield, okay? So in a perfect world, you would leave that capital there as available to be used for that purpose, okay? Now, over the course of a bull run, the value of these primary assets will also appreciate. And I get this question a lot. Well, Brandon, I put in some liquidity and it went down in value. It went up in value. Like, what the heck is happening? Well, your LP pairs are still exposed to both the downside and the upside of the market. Meaning, if I pair Bitcoin and ETH, and these two assets go up in value long term over the course of the next 12 to 18 months, well, that means the value of my primary asset, the value of my liquidity positions, also increases over time. So not only am I earning the yield, meaning the secondary, but I'm also earning over here. Okay, so now I've got earnings from appreciation, I've got my secondary assets, then I've got my tertiary assets, then I've got the appreciation of these, and I've got the appreciation of these. So do you see how the profit opportunities start to stack on top of each other? Typically what you'll see, and this is true of many investment approaches, especially like day trading, and it makes sense. It's not bad. You go, hey, I'm going to buy low and sell high. Great. That's a legitimate strategy. Now, obviously, there's lots of tactics and tools associated with that, but you would say this is one profit opportunity. And I say opportunity because obviously with this approach, if you miss, you would lose, right? If I buy it at a certain number and then I sell it lower than when I bought it, it's obvious math, right? You lose money on that transaction. So one profit opportunity, and then if you take that approach, you probably have many different swings, right? You're gonna try, you're gonna swing. Sometimes you hit it, sometimes you miss it. Sometimes you win, sometimes you lose. It goes up and down, up and down. And if you're good at it, long term, you'll make money in the end. But we're just saying, like, hey, let's multiply the opportunity. We're going to multiply the opportunities for gain. Okay. And I think this should go without saying. I'll say it anyway. No one can guarantee you anything. It's the crypto markets. No one can guarantee you anything in the regular stock market. Like, think about 2008, right? Everyone thought like, oh, it's safe. It's the housing market. Like, it can't, like, in that historical context, we can look back and go, wow, not even the housing market was guaranteed. That seems ludicrous, especially if you were on the other side of it pre-2008. It would seem ludicrous to say, you're telling me the housing market could lose me money? Give me a break. Well, it happened, okay? So when I say nothing's guaranteed, I mean it literally, but I'm assuming too that if you're here, you're kind of like me in the sense that you believe in the crypto market as a whole. Because again, what are we talking about? We're talking about an innovation in technology. We're talking about an innovation in how people transact with each other and how people exchange value. So my belief, in my opinion, is that this is going someplace, and there's going to be a lot of opportunity to make a lot of money here. But you just have to say ahead of time, hey, nothing's guaranteed, and it's a little bit risky. In fact, one of the FAQ videos is what are the risks in crypto investing. So you might want to check that out if you're curious about like, hey, what are the risks involved here? But what I'm saying is, if you're going to play this game, again, from a strategic perspective, why would you not want to multiply your opportunities for gain? Okay. So when we put all that together, here's one opportunity, which would be, hey, I've got two assets, Bitcoin and ETH. I'm just going to buy those. I'm going to hold them. And over the next 12 months, they'll probably go up in value. Over the next 10 years, they'll probably go up in value from where they are today. Great. That's my first profit opportunity, is the appreciation of those. Now I'm going to create a situation with my LP where now I have a second profit opportunity. That second opportunity is when I produce some sort of reward, yield, secondary assets, okay? Then I acknowledge that, hey, those other assets that I gain as a result of that, they also have an opportunity to appreciate in value. So if I create my little LP over here and I get some new assets and then I hold on to them and over the next year they go up, well, great. If I was rolling at 80% APR, but then the yield that I produced at 80%, let's just make the math easy. Let's say it doubles over the next year. Probably in a bull run situation, it'll do more than that, but we don't know for sure. But let's just, for the sake of illustration, let's say it doubles. Well, in effect, now, if we work backwards, we go, well, that 80% APR, if I produced $100 and that was representative of an 80% APR, but then that doubles, that's 200, that's in effect 160% APR. So again, I'm just for the sake of illustration, keeping the math super rudimentary here, okay? The point is, whatever you produce, if it goes up in value, then you also effectively increase your profit opportunity. Then we have any other tertiary assets or opportunities that we're creating as a direct result of those other assets. That's our fourth opportunity. And then those assets, our fifth opportunity, also have an opportunity to appreciate in value over time. And again, it's a market, right? So up, down, sideways, all over the place, depending on the situation. I believe that in all likelihood, over the next 12 to 18 months, we're going to see market wide, but it differs depending on which assets you're holding, but market wide, we're going to see a general uptrend. Okay. So now we've got all these different profit opportunities. And then if you want to capture the last one, this is also a possibility. We can compound all of that back into the original base capital, and that creates another profit opportunity, because we're saying instead of earning this 80% APR on just the base, we're going to earn that 80% APR on the base plus whatever other profits that we've generated as a result of this. So you might look at this and go, well, yeah, but then that'll be a fraction on a fraction on a fraction. Yeah, that's the point. Is if you break it down to like daily APRs, they look really small on the daily, but when you start to compound on a regular basis, you might compound daily, you might compound monthly, you might compound yearly. I don't know. There's different tactics, different tools. But depending on how often you compound and what you compound and how things go, you can create up to 6 different profit opportunities by leveraging a strategy like this. Okay. So I'm gonna wrap this up because I don't want this one to be like too long and drawn out. I just want you to know, like, hey, reorient your perspective on this rather than saying, hey, buy low, sell high, that's it. Understand that you have many other opportunities that exist in the world of decentralized finance. And when you have the right strategy, and I'm just gonna kind of draw the simplest version of it here, right? There it is. Very simple in terms of a diagram. There's obviously more to it than that. But when you have the right strategy, now we can dig deeper into the tactics and the tools. Typically, this is what everybody wants to jump right to. Brandon, just tell me what wallet to use. Tell me what assets to buy. Tell me where to put the money. And I go, yeah, like, listen, that's fine. Like, that's part of the process. But you have to have the strategy first. Otherwise, the tactics and tools that you use, you're just like making stuff up as you go, and you don't really have any direction that will shape the end result that you get. So in other videos, we're going to get more into tactics, right? And we're going to get a little bit into tools, especially when I do the example, the demo of setting up a concentrated liquidity position. I'm going to show you a few tools, and we're going to dig into it, but understand even ahead of time, I'll say this again when we get to that video, understand ahead of time that I'm only going to show you 1 or 2 tools, because you got to start somewhere. By no means am I saying this is the only tool. You have to use this tool. None of the other tools matter. I'm not saying that, okay? And you'll find out on the session on scammers, that's typically what either scammers or just less experienced, like the crypto gurus who like say they're great and they don't actually know what they're doing. That's what they're doing. They're just saying, hey, look at my one tool. You have to use this tool. All the other tools are garbage. That's not the approach here. Here we're saying it's an entire ecosystem. It's an emerging technology. There will be the rise and fall of tools all over the place. We've experienced this in other industries as well. And if you're in a community of other like-minded investors, you can stay up to speed with what tools are right now at the forefront that are still safe and reliable, but are advancing the ecosystem and the infrastructure of decentralized finance. And I don't know about you, but for me personally, those are the tools that I want to be using as long as they fit into the strategy, which is what we outlined here today. Okay, so that's all for today's video. Again, if you got questions about how all this works, drop your questions in the group. We can chit chat back and forth about it, but also just know that this will make a little more sense in subsequent videos where we break down how to actually implement this strategy in order to make it profitable. I'll see you on the next video.